Capital Markets TV, and we're looking at the ways of raising capital, and on this occasion with Islamic bonds or sukuk. So we're talking with Mohammad Tariq from the Islamic Development Bank. So what are the key elements of raising capital the Islamic way?
I think, of course, you can have equity as known in the conventional market as well. Of course, the issue is that the party raising the money must have Sharia compliant business. So that's one. As a component of the debt market, they can borrow directly, but that will be an actual debt which cannot trade. So you can raise money, and of course, in the case of Islamic way of doing things, you do not actually lend money. You give money to actual economic activity, which tends to be project finance. So the money should be deployed for certain purpose, and hence the money can be provided different ways. Financier can participate in the deal as well through his own, or it could be equivalent of debt financing.
Project financing is or has been the traditional areas of lending for you. So how is that changing?
I think the nature, project finance is still there, but the nature of those projects are changing as the demand from our member countries changes. Now, as I mentioned in my short presentation, that food security is of paramount importance. Agriculture is. It wasn't the case. It's difficult to monitor the outlying areas in which these activities take place. But the nature of importance is so great that this is how it's changing.
You mentioned member countries, so what is the structure? You have some which are perhaps like full-time members and others who are on a different step of the ladder, perhaps?
No, I think what we have is we have currently 56 members. One of the requirements is that you have to be a member of OIC, Organization of Islamic Conference. So this is a requirement. But other than that, all members have the same status. Right. The minimum requirement is to be subscribed 2.5 million Islamic dinar, which is just over $4 million. Okay. So that's the requirement. You pay over 5 years. After that, you have the same rights as anybody else. Because we are providing project finance, we are not providing money to the country per se. Right. That's why whether you have a larger share or a smaller share in the business doesn't matter.
Now, when it comes to the capital, you have two divisions, so to speak. You have paid-in capital and subscriber capital. So what's the key differentiation?
The key differentiation is that for the paid-in capital, of course, when we increase our capital, which we had done a few years ago, we had given 5 years to pay. So that amount is being paid. If a member takes a permanent seat, it has to be subscribe more. So that's the cash component, right, okay, but paid in over a period of time. So that's very clear. The other capital, which we call subscribed capital, that's subscribed for a very special purpose, that you as a member country subscribe to a certain amount, and that will be called in only if IDB fails to meet its market commitments, like we have sukuk payments, coupon or capital. We may have guarantees. If IDB fails to meet these member countries stand behind to the extent of their commitment to make good that commitment. That's basically the critical difference, and that's typical of multilateral development banks, because in our case, there's no specific body which regulates us. Although we take care of good governance, we have two external auditors, for example, and we are rated. So we must meet and we provide financial statement. We must be doing all those things. But still, in the end, we are not following any single regulator's guidelines. So there is a investor confidence that those who buy our paper, our debt paper, or sukuk, if or otherwise, what happens if we don't meet our commitments? We have borrowed money from a bilateral basis, but we fail to meet on the actual deadline. So only to that extent of our failure to meet will be met by these sovereign states. When that requirement is over, we have to pay them back.
So you're talking there about confidence, the rating is AAA. And just to finish off now regarding the Islamic Development Bank, the growth has been pretty steady. It hasn't been shooting up or dipping down. It's been a steady growth. So
about 15% per annum roughly has been the average growth for providing financing over the last 4 or 5 years.
And how do you, to finish off, how do you see that growth developing over the next 2 years?
Yes, because of the crisis, because of the needs of our member countries anyway, they are all developing countries, they're all South-South institutions. So the board has encouraged us, Board of Governors of the bank, which is the supreme body for us, to increase the growth rate to 30% as far as commitments are concerned for the next 3 years. Of course, subject to our policy and procedures, subject to finding appropriate projects. So 30% for the next 3 years, then go back to 15% growth, so 13% compounded way. So it's a substantial increase to be seen, but the benefits will be seen by our member countries, which do require development finance in increasing amounts.
Mohammad, thank you very much for joining us and giving us fascinating insight into your operations.